2024 GAR contract changes. We are continuing on with this series. I am Dana Sparks, broker of Maximum One Greater Atlanta Realtors and director of the Real Estate Academy of America. I will link below. We are teaching continuing education classes on these changes in December of 2023 and continuing on into January of 2024. But for this video series, please make sure to check out all the videos linked in the description below of the series of all the changes that I'm going to address in here on YouTube. And please subscribe so that you don't miss any of these. So today what I'm going to cover is I'm going to cover the changes that the Georgia Association of Realtors Forms Committee has made on the financing contingency exhibits. So hang on and we will get started on those. Now, also stay tuned to the end. I'm going to talk about an exhibit that you as an agent may not have used lately and may be an important exhibit to use in 2024. So stay tuned for that. But the first thing I want to start off with is the conventional financing contingency exhibit, which is GAR, Georgia Association of Realtors Form F404. And as always, with similar forms, any changes are universal. So this first change I'm going to talk about, they did make this change in all the loan contingency exhibits. So the first thing they did is in the section where you actually describe the loan. It has first mortgage loan and it has loan type where you put in the percentage of the purchase price, term, interest rate, the rate type, if it's fixed, adjustable, or interest only. Well, it used to have in 2023, there was an additional column and it used to say source of loan terms, institutional, seller, or other. They got rid of that column in the financing contingency exhibits and all of them. So why is this important? Well, it's important for a couple reasons. For seller financing, sometimes agents would use this loan exhibit and mark the seller as the source of the funds. Additionally, we had a lot of agents using the conventional financing contingency exhibit when their buyer was getting a hard money loan, and they would indicate that in the source of the loan by putting other rather than institutional. So just a point of practice for you agents. If you are working with a buyer who is getting a hard money loan, now you cannot use the can't use other. You would have to use the no financing contingency exhibit and describe it in that, not making it contingent on that. So just wanted to bring that to your attention. And again, that is in all of the financing exhibits. Now, in the conventional, under the appraisal contingency, where it describes what that is, and I'm not going to read the whole paragraph. You know, last year what GAR did is they separated out the time frame for the contingency periods into paragraphs 3 and 4, and then they described what those contingencies were elsewhere in this exhibit. So the appraisal contingency is not a time frame to terminate for a buyer if the appraisal comes in low, like you think of as the other contingencies. The appraisal contingency in the conventional loan exhibit is the time frame, the fill in the blank number that you put in paragraph 4, which is the length of time from binding agreement date. That is only the time frame if the appraisal comes in lower than the sale price for the buyer to ask the seller to reduce the price. It is the time frame for the buyer to send an amendment to the seller to reduce the sale price to the appraised price. And then paragraph 13 goes through that entire process. So if the appraisal comes in lower than the contract sale price, and the buyer would send the appraisal and amendment to the sale price within those number of days from the binding agreement date, and then the seller has 3 days to either accept the lower sale price or not. And then the buyer has 3 additional days after that to either terminate the contract and get their earnest money back, or to go ahead and, if the seller does not agree to the sale price, pay the higher price, just bring additional cash to the table. For the difference between what a lender will lend them based on a percentage of the appraisal price and what the contract price is. So GAR just further clarified that in 2024 at the end of paragraph 13, and added in there, nothing herein shall require the buyer to seek a reduction in the sale price of the property. If the buyer does not seek a reduction in the sales price, buyer shall be obligated to purchase the property for the price agreed to by the parties in the agreement. Now, under the FHA contingency loan exhibit and the VA, the changes they made to FHA and VA are the same. Again, they removed that column for source of the loan. Now, under the Amendatory Clause, which, as you know, is in essence an appraisal contingency, on the FHA, it says that the FHA appraiser goes out there and there is a fill in the blank for a dollar amount that the buyer and the seller negotiate. And the FHA, if it does not appraise for that agreed upon dollar amount by the buyer and the seller, then the buyer has termination rights through day of closing and will get their earnest money back. They have added for 2024 a brand new paragraph, paragraph 13, that says further agreement pertaining to Amendatory Clause. Notwithstanding the above, if the written statement by the Federal Housing Commissioner or direct endorsement lender sets forth an appraised value of the property that is less than the minimum appraised value, buyer shall immediately provide seller with written copy of such appraised value. Seller may, but shall not be required to, within 5 days from the date the buyer delivers notice to the seller of the appraised value, reduce the purchase price of the property to the appraised value upon notice to the buyer. That will be the new sale price. In such event, the parties shall immediately prepare and sign an amendment to the agreement reflecting the new sales price and deliver a signed copy of the same to the other party. Buyer and seller shall then close this transaction at the amended sale price. All other provisions of the agreement shall remain unchanged. The Amendatory Clause section in section 12 above shall remain in full force and effect even if the financing contingency has expired. So what does all of that mean? All of that means is now on an FHA, and they have the same verbiage in a VA. If the appraisal comes in less than sale price, the buyer says that the new paragraph says that the buyer shall immediately send the seller a copy of the appraisal price, and the seller has the option within 5 days to sell it to the buyer at the lower appraised value. And if the seller agrees to sell an FHA or VA buyer agrees to lower the sale price to the appraised value, the buyer is obligated to consummate the sale and go to closing. Those are the only changes. And you know, last year the change that GAR made to the VA loan exhibit is regarding the termite letter. Either buyer or seller may pay for the initial termite letter, but the buyer is not allowed to pay for any repairs or any new letter if repairs had to have been done. Now, the exhibit that GAR has upgraded or revamped for 2024 has not had a lot of attention lately because it really has not been in use for many years. However, this is the loan assumption exhibit, and they're based on the current interest rates right now. There are a lot of, this is GAR form F416. There are a lot of buyers that are potentially looking to assume a seller's current loan. The majority of conventional loans may not be assumed. So typically this would be for an FHA or VA loan. I am not going to go over this entire exhibit. Please take one of our classes. But when you do get the new GAR forms, I just wanted to bring this to your attention. I'm not going to go over the entire exhibit because this is going to be an actual new exhibit for a lot of you, because the interest rates having been so low, there weren't a lot of assumptions going on. But some of the revamped items that GAR did to this exhibit is it confirmed if a buyer is assuming a seller's VA loan, that the buyers does have entitlement for the VA loan assumption. They went through and talked about length of the new paragraph about length of the financing contingency period, length of time for a buyer to request a reduction in sale price. So basically that same appraisal issue. Information about new paragraphs about a loan denial letter, right of the seller to request evidence of the buyer's ability to close, which is similar verbiage that you've seen in the other financing contingency exhibits themselves. And rights of the buyer if the property does not appraise, so forth and so on. So in other words, they've revamped this and added a lot of the paragraphs that had been in the other loan contingency exhibits that you are familiar with, and added some information, especially with VA loan and entitlement. So take a look at that. Again, conventional loans, most conventional loans are not assumable, and it is a bit tricky to assume an FHA or a VA loan, but there are probably going to be a lot of buyers at least pursuing that as an option. Thank you guys so much for watching. I'd love to hear your comments below on your thoughts on the changes the Georgia Association of Realtors is making on these contracts. And again, please stay tuned for other videos in this series and subscribe so you don't miss any. Dana Sparks, broker of Maximum One Greater Atlanta Realtors and director of the Real Estate Academy of America. Satisfying your needs with service, innovation, and education. Bye. If you like that video, check out the one here. If you like the content on this entire channel, please click here to subscribe. I try to take even the most complicated of real estate situations and make them crystal clear. See what I did there? Real estate made crystal clear. Thank you guys so much for watching.